Hey guys, how's it going, and thanks for coming. I'm Nick, and in this video we're going over gold. Just so you know, this isn't gold. If it was, it would probably weigh like 20 pounds. So should you invest or keep any type of money in gold or even silver, which we're going to touch on as well? Now, a lot of people say they don't like gold because it doesn't give you anything. It's not a business, doesn't give you dividends, and you don't get anything for holding it. Essentially, it's like a rock. Warren Buffett does not like gold. However, interesting fact, he did invest in silver in the 90s. And if you're a Dave Ramsey fan, he does not like gold either. However, instead of taking these guys' thoughts for fact, why don't we actually look at the actual numbers if they are good investments? Especially if your savings account is getting 1%, maybe 1.5%. I know those savings accounts rates are dropping. If gold could gain more than your savings account, it might be worth it. Especially with inflation. Inflation is higher than your savings account. So essentially at the end of the day, you're losing money. Where if gold or silver might make sense, you actually might make more or at least maintain your buying power. Speaking of buying power, let's look at the dollar chart of how well a dollar has held up to time. I mean, I don't think I've seen a worse chart than the dollar. It started off in the early 1900s, basically when the Fed was created. That's a story for another day. And then ever since then, it just kept, there were some ups and downs in the early creation of it. And then it was just straight declining forever. And it just lost over 90% of its purchasing power. So if you have a savings account, that's essentially what it looks like. It's just going down, down, down. Especially with inflation, you're just getting eaten up and destroyed over time. But what about gold? How did that do over time? Now, some other people that actually would suggest gold, unlike Dave Ramsey or Warren Buffett, another guy, Ray Dalio, top hedge fund manager in the world. I actually just did a video of some billionaire portfolios that you might be interested in. One of them including Ray Dalio. I'll leave a link in the description or a card here so you can check that video out. Very interesting. But him along with a bunch of other people as well. Another guy, Peter Schiff, he's actually pro gold as well if you want to look into any of these guys' names. However, they do suggest holding 5 to 10% of your portfolio in gold, and we might learn why looking at these charts. Yes, more charts, because I like charts. You can only learn so much from just talking to someone. I gotta show you some cool things. So looking at gold's chart, this is since the early 1700s, early 70s, 1973, and it started around $76 an ounce. And you can see it had ups and downs. Kind of the middle of it was kind of stagnant, and then all of a sudden it just took off, and it right now may not be at the very top, but is on the climb. I'll even throw silver in there real quick. Even more interesting chart, even more volatile, all over the place, but you could see drastic spikes. Then it was kind of suppressed for a while, then more drastic spikes, and right now it is still relatively kind of low. So there you have it. Video over. Makes sense, doesn't it? No, I'm kidding. So I actually want to look into what gold could actually give you as a return. So for example, if your savings account is under 2%, probably closer to 1%, if gold has a higher return than that, it might be better to have some in gold, like Ray Dalio says, maybe 5 to 10% in your portfolio. Especially with that dollar declining. Mostly because the Fed keeps printing dollars. No one really wants to talk about that. I kind of talked about it in the other video. But no one really cares. So I did some calculations. This is what we came up with. So I just took the main years. So this is the gold price. So we recreated that chart right there, starting in 73. Then it spiked in the 80s. Then I just did decades, so 1990, 2000. The recession in 08. Then it spiked in 2011, bottomed in 2015, and right now we're in 2020. So those are the reasons why I chose those years. So you could see at the bottom is the percentage change in gold during those years. And I wanted to determine what kind of returns gold actually gave. So you can see the first major spike from 73 to 80 was from $76 to almost $700. That's an 800% gain in several years. That actually equates to an average of doubling your money every single year during that period. However, we did see that lull for quite some time. So since the 80s and 90s, it was kind of the same. Then once it got closer to the 2000s and 2008, it started taking back off. So you can see the column, the percent change. And that's the percent change basically per decade, or the last major thing. So it started off with an 800% increase. Then it was cut in half, dropped a little bit more. Then in the 2000s, started taking off a little bit. So up over doubling money, almost tripling your money. But you could see at the very bottom how much it increased from 1973 until now is over a 1900% gain. So which is basically the complete opposite of the dollar. The dollar decreased over 90% when gold maintained its value and increased 1900%. Now, by the way, I don't want to state that like gold increases its price. It's basically comparing to the dollar. Because the dollar is decreasing, gold is seen as more expensive just because you need more dollars to purchase the same amount of gold. So if you were to bet on gold, it's almost like you're betting against the dollar. You could think of it that way. So I remember Dave Ramsey said, I forgot what data he was using, maybe the past 50 or 100 years or something like that, but he said gold has an average return of 2% a year. Again, I don't know his statistics and his calculations. What I created, that's not right at all. So the last column is the yearly change that was going on during that period. So since the 70s to 80s, it was like 100% gain per year. Then those decades really weren't moving. But basically at the end of the day, if we're looking super long term, since 1973 to 2020, the average return per year ever since then was 42%. So that's like really basic math. It's a lot different. You know, this is basic, simple division. There's a lot more stuff that could go into it, but a basic view of it is that you could easily see that gold has a huge increase per year over the super long term. Now I will throw in silver right now as well if you're interested in that. I did something very similar. This chart started in 1975, started at 425. 2020 is now at 1764. So it's actually still relatively kind of low. However, very similar chart. Again, that spike increased over 800%. And the total change since 1975 till now is over 300%. That means since 1975, the average per year is around 7%. Again, super basic math. Do not go off of these numbers. These are just to kind of get your idea focused around what happens. And you could obviously see that silver spikes a lot more than gold. That's a fact. Now here's the thing as well. You know, you might be worried about, well, what if something, it lulls for 10 or 20 years like it did in the 80s and 90s and basically up until the 2000s, is nothing really happened. However, it's different today versus back then because the Fed is just on a money printing spree, so you really can't compare now to in like the 90s. Because it's different time periods. So if you want to look at returns, it could actually be completely different of now versus back then. So just quickly giving some comparables, not only to the dollar and savings account, but also to the stock market. So I just looked up the Dow Jones. The past year, it increased around 15%. Gold actually increased 20%. So when Dave Ramsey says gold doesn't outperform the market, it actually just did. So I definitely wouldn't recommend completely writing off gold or even silver for that matter. I don't want to get too deep into it. There are news things and lawsuits that there could be banks spoofing metals and they're just suppressing the prices, and then if a recession hits, the price just spikes. If you are interested, you could do a little bit more research into that. However, these are the price charts of the precious metals. So you can decide to have maybe a certain percentage of your portfolio in gold, maybe in silver, especially if you see the dollar decreasing dramatically. It's basically a bet against the dollar. So of course, do your own research. There should be a reason why you're investing in something like this. Just because someone's buying it doesn't mean that you should. I definitely wouldn't say silver or gold is an investment. It's more of like an insurance, because look at the dollar. It's declining. They're printing more. That's a fact that the dollar is probably going to decline over the long term, which would then mean gold and silver is an insurance policy against the dollar because they're maintaining their value while the dollar's dropping. So just food for thought, something to kind of think about. The silver to gold ratio right now is ridiculous. It's at a 90 times. That means 90 times the amount of the silver price equals the gold price. That's completely out of whack. The normal is like maybe 30 or 40 times, which means silver could double. So understand the reason why you might want to be against or for gold. Buffett is correct. You are not going to get any dividends from a rock. However, at the same time, Ray Dalio is also correct. If you maintain a certain percentage, you maintain your wealth because it is an insurance policy against the dollar. At the end of the day, everyone will agree that the dollar sucks and it's going to decline even further in the future. And something else, by the way, in the 1970s, that's when money used to be backed by gold. Like there was something to a dollar. Now it got taken off the gold standard. So now money is just money, not connecting to anything. Nothing is backing it. So that's why you really can't compare what the price of gold or the dollar is doing back then, because right now is completely different. And that, my friends, is where I leave you off. So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. What do you think of gold and silver? Do you think you should hold some? Maybe a little bit. By the way, gold price is around $1,550 or so right now. And silver is around $17, pushing $18 an ounce. So I'd like to come back in a couple years and see where they are at that point. But until then, thanks so much for watching, guys. Really appreciate it. And I'll see you in the next one.